Hello, my name is Shreyans, and today we are going to do a basic financial analysis of a company that's in a very interesting sector because the sector is a cyclical one, and at this moment, it might be at a place where there might be an up move in the cycle of the industry. So, before we start, please remember that this is not investment advice, we're just trying to understand the financial performance and position of the company. So, let's get started. The company that I'm talking about is Ultratech Cement. As per its website, it's the largest manufacturer of cement in India and one of the largest in the world, right? So it is quite big. And the real estate sector is one of very high importance in the country as well because first of all, it provides a lot of employment. It leads to creation of infrastructure, and then there are a lot of industries that benefit from the creation of that infrastructure. And real estate hasn't been in the best of places since the last few years, and the economy also hasn't been in the best place in the last few years. So the real estate sector somehow, goes on as per the economy. If the economy is doing well, the real estate sector and cement sector as well does very well. But when there are problems with real estate, then obviously there are problems with all the industries that are related to real estate. So that is where we are right now, and let's see how it goes in the future. So let's start with the financials of the company. Now, this is something that you would expect from a cyclical company, is that there is a slight volatility with respect to the growth. And on an overall basis, the growth in revenue, EBIT and PAT have been decent. So revenue is up 3.1x, EBIT is better than PAT, revenue, which is up 3.5x, and PAT is better than even EBIT, which is 4.3x, right? So decent growth rates here on compounded basis. The thing to understand here is obviously that the growth hasn't been that consistent. So a couple of a very good year, a decent year, a poor year, again a decent one, couple of poor years, couple of very good years, then again a poor year here. And this is the story that goes along with EBIT and PAT as well. One thing that I would like to highlight here is that the PAT has suddenly jumped from this point to this point, right? And this is something that can be explored in further detail because I don't understand this sort of such huge jump. There might be some exceptional items as well, or there might be something that has changed for the company. But this is something that needs to be looked at because this is a very big jump, so to speak. And without that, the growth CAGR wouldn't have been what it is today, right? Now, talking about the cash flow from operations, so very strong cash conversion. In fact, if you would take a look, then cash flow from operations is greater than profit after tax in each of the 10 years, right? And on an overall cumulative basis, the cash flow from operations is about 45,000 crores and the PAT is about 26,400 crores. So cash conversion side, the company is doing very, very well. And now let's talk about the other two aspects of cash flow. So what the first is investing activities. So with investing, the company has continuously made investments into its asset, and this is something that you would expect, right? There have been, years when the investment has been low, and there have been years when the investment has been high, but then again, it just reflects the nature of the industry. There are a lot of investment related transactions as well, due to which somewhere you might see that there are positive net flows, right? But on a consistent basis, the company has invested into its fixed assets, right? Cash flow from financing. So with cash flow from financing, there have been a lot of borrowing related transactions. So raising borrowing, repaying borrowing, the interest on that borrowing, so on and so forth, right? And all of these transactions have been carried out in each of the 10 years. So borrowing is a large driver of the cash flow from financing. There have been dividend payments as well. So the company has consistently paid out at least some dividends, right? Now let's come to the balance sheet items. So if you look at equity, very, very decent growth in equity. It is up 3.7x. So a CAGR of around 15.6%. And if you contrast this equity with the non-current liabilities, so the non-current liabilities have grown at a slightly higher rate. It is up 4.6x. And a large part of these non-current liabilities are actually borrowings. And it seems that the company has sort of, raised borrowings in the recent years, due to which the increase is much higher than in equity, but the leverage or the solvency position is still more or less comfortable, which is something that we see, right? Now, talking about the current assets, the trend in current assets has been, somewhere similar and much more much more controlled compared to revenue, right? So there's been mostly a steady increase here in current assets. So the company is managing those assets fairly decently, so to speak. Non-current assets, we've already talked about. Non-current assets are at 4.5x. Obviously, not all of these are fixed assets that are used in the production, but a large part of these non-current assets are the assets that are used in production, and continuous reinvestment has taken place. Current liabilities, if you talk about, then I mean, current liabilities have been slightly more volatile than current assets, so to speak, right? And this is something that I feel might be due to the fact there might be either short-term borrowings or there might be, current maturities of long-term debt. So originally it was a long-term liability, but there is an installment that is being paid, that is required to be paid in the next 12 months. So it has to be classified as current, due to which there might be sudden increases. For example, a sudden increase here, then another here, if assuming that some amount was paid in this year. And then again, if you see, then from FY17 to FY18 and also from FY18 to FY19. So there has been a sudden increase in the recent years, which I think is mostly driven by the current maturities of long-term debt. All right, now let's quickly go over the growth of the high-level financials. Revenue is something that we've already talked about, and EBIT and PAT also. If you could look, this one was an exceptional year, but apart from that, if you look at, there have been few good years, few poor years, and few average years, right? And the FY20 was, in some sense, it was slightly different than all the other years because there was a lot of good growth. So on FY12 here was very solid growth, and from in FY20 also here was very solid growth. But with PAT, I would rather check that if there is some exceptional items that are there, right? And so in 3 years, in 3 out of the 9 years, the PAT has actually decreased, right? So that kind of signals about the volatility. CFO is something that we've already talked about. I mean, it's okay to be volatile, but the important thing here is that the cash conversion is quite strong. Equity, decent growth in equity, solid growth there, right? Assets also more or less very consistent growth. There have been a couple of years here, I think, when the company seems to have made significant investments into the assets as well. And this is something that I will come back to later because there is a very interesting thing to talk about if you're going to research this company deep, right? Current assets less current liabilities, we've talked about the working capital management. I mean, more or less it seems stable, but then due to, current maturities of long-term debt, it on the surface, it looks more volatile, right? Liabilities overall, these are total liabilities, not just current or non-current liabilities. I mean, there have been in overall an increase in liability. So if you look at the overall increase in liability, 15.6 CAGR, it is very similar to the increase in equity, 15.6 CAGR. But a lot of this increase has been contributed by the recent years, right? Okay, now moving on to the metrics of the company. So return on capital and return on equity. So there have been only a couple of years when these have been greater than 15%. But in the recent years, although the growth has been, slightly volatile, but both of these have more or less been around operating around a certain range of, let's say, a median of 11.7 and 12.1, right? So mostly both of these have been operating around here. Not the best of figures, to be honest, but yeah, I mean, at least from consistency point of view, these look okay, right? Now, talking about the margin, so EBIT margin seems to be slightly more, operating in a specific range. PAT margin is slightly more volatile. So if you look at EBIT margin, then, the median is 13.9, the maximum is 17.9, and the minimum is 11.8. So it is a fairly lower bracket, so to speak, or a smaller bracket. With PAT, it is slightly more volatile because the maximum is 13.8, the minimum is 5.8. Here is the minimum is, the difference between minimum and median is higher than the difference between median and maximum, right? So it's slightly more volatile, but both of these have been operating in the range. Again, not the highest of margins. That is something that you'd find in other industries, but then this might be a reflection of the industry as well, right? Capital and asset turnover have also broadly been maintained, right? They have been again operating in a specific range. In the recent years, they seem to, at least the capital turnover seems to have fallen a bit compared to the stability that could be witnessed in the earlier years. And with respect to asset turnover as well, there has been a slight decline in the recent years. So this is something that remains to be seen, right? Talking about the leverage and the solvency related things. So if you look at asset by equity, so more or less it is something that's been going around fairly stable, so to speak, that the company is kind of doing okayish with respect to its leverage position, because there is debt, but the company seems to be more or less comfortable. There is another thing that I forgot to take here, which is the net cash flow. So let's take a look at the net cash flow as well, because this is about the net cash flow from operating, investing, and financing activities, right? And if we take a look at this here, uh, right. So if we take a look at the amounts that are here, we'll just remove the decimals here. So on an overall basis, if you look, then there is a positive sum, 783. So it kind of indicates that the company is able to, generate enough operating cash flow so that it can deal with the investing and financing activities. But then there are significant borrowing related transactions as well. And I think that the company does require external capital, because its asset utilization and its margins and its return are not the highest. So in order to grow and expand, it does need a lot of capital, and from that fund the debt is also helping, right? Current assets less current liabilities, we've talked about it. It looks volatile because whenever I think there is a maturity of long term debt, then the current liability figure suddenly shoots up, and current assets have been more consistent. And finally, the non current liabilities to equity, this is something that we've talked about. This is towards the higher end, I mean not the highest end, but towards slightly higher, but still it's a manageable position, so to speak, right? And the company does seem to have raised in the recent years a lot of debt, or an increase in non-current liabilities, right? But still, it seems comfortable. It seems manageable, because on an overall basis, also it is hovering around 2x, which is more or less comfortable, right? Let's just take this as well. All right, now let's talk about the highlights of the company. So let's try to summarize what I think is decent overall growth. So if you look at the CAGR figures, these are decent, but of course there is inconsistency, and that is the nature of the industry. There's not a lot that we can really do about it. Strong cash conversion, CFO is greater than PAT in all 10 years, and cumulative CFO is approximately 1.7x of cumulative PAT. And if you look at the CFO to PAT ratio as well, so here you can see that in all the years it has been greater than the PAT, right? Now, continuous reinvestments into assets, this is something that we've seen. Non-current assets are at 4.5x, and CFF, the cash flow from financing, are largely borrowing related transactions. In investing also there are some investment transactions, and in financing there are some dividend transactions as well, but these seem to be the major drivers, right? Decent growth in equity, up 3.7x. Non-current liabilities, which are majorly borrowings, are up 4.6x. Most of it is driven by the recent 3 years, and financial leverage is at 2x, right? This is something. So comfortable still, right? Manageable still. Growth in current assets lower than growth in revenue. Sharp growth in current liabilities in a couple of years here and there, right? And that is possibly due to current borrowing dues of current maturities of long-term debt. So return on capital and return on equity greater than 15% in only 2 out of the 10 years, right? And median ROCE and ROE are 11.7 and 12.1% respectively. So that is why, so the company is not generating enough earnings, and the capital turnover is also on the lower side, so to speak, right? And that is why the company needs to, get a lot of capital in order to grow. The EBIT margin has operated in a range. Median is around 13.9, while PAT margin has been slightly more volatile. Median is around 10, right? Capital and asset turnover have largely been consistent, right? So the company is able to maintain the efficiency of its operations as it scales up, but there has been a slight decline in recent years, right? Possibly due to a lot of investment that has also been made. There is a good amount of debt. There is it's not very worrying debt, but it is there is a significant portion of debt in the capital structure, but the solvency position seems to be manageable easily. There are at least at this point of time there are no causes of concern. So in conclusion, we can say that it's a cyclical company, it's a cyclical business with average financial performance, right? I mean, average ROCs, probably below average as well if we compare it to other industries. But then again, this is the nature of the industry. And again, the margins are also on the lower side, but there is decent growth overall, inconsistent, but overall decent growth and balanced financial position, because there is a lot of debt as well. Now, one important thing that I want to talk about is, if you're going to, study this company in detail, then I think there were some accounting policy changes here in FY20, right? Because there was a very big increase here in non-current assets from FY18 to FY19. which was, but then the cash flow from investing wasn't that big, right? And that is why I thought, okay, let's maybe take a look at the balance sheet. And what I figured is that in the FY19 year, the FY19 annual report, this figure was lower, right? In fact, the total assets were around 65,000 crores, not just the non-current assets. But then in FY20 annual report, you see that the FY19 figures have been restated. So there seems to be some sort of accounting policy change that has occurred, due to which these figures look slightly optically they look more volatile. But so if you're going to read this research into this company in detail, please read through the annual report carefully. Please look at the accounting policies to understand that what changes have taken place, right? So this is all that I had to share about this company. It will be interesting to see that how this company moves forward, especially in FY21, because of the initial lockdown where business was completely wiped out, but then also due to the pent up demand and the real estate sector also picking up slowly. So it will be very interesting to see how this goes, and if the company can start that up move in the cycle of its in the industry life cycle. All right. So that is all that I had to share about this company. I hope you found this helpful. If you have any questions, then please drop them in the comments below. I'll answer them as soon as possible. Right. The link to the Excel sheet is available in the description. If you want to receive updates about investment research and a lot more, then please subscribe, or you can sign up for the WhatsApp list. Thank you so much for watching. I'll see you again with another company.